Welcome to another video by the Market Maker SA. I hope you are doing good. I hope yours traded strong. I hope you had a good trading week. And welcome to a video, of course, before the opening of the new trading week, just before the opening of the trading week. Welcome to another video. Don't forget to like, comment, and subscribe. Don't forget to hit that notification bell icon. This week we have this video we have a good video, and yeah, let us begin. So today we'll be looking at how I managed to flip $60 into $500 plus in just a week. Now, obviously, before you continue, don't forget to like, comment, subscribe. Don't forget to tell us where you're watching from. So, without further ado, let us begin. So, obviously, what happened here is there was a week. I think this happened the week before last week, where we had this incredible trading run where we deposited $60 and we managed to make 500 plus, almost to $1,000 within a week. Now obviously what happened here, we traded about 5 pairs and we went a bit aggressive with them, and today we're just gonna go through how we did it. So obviously today we're gonna start with gold. Of course, we're gonna start with how we traded gold, and as you can see here, if you can see, for example, how we did it is that obviously we started with the $60, we added the $60 into the account, and then we began trading. As you can see right there, $60 were put in. So then we began trading, and we started with gold. Went in there 510, we went in there 0.15 all in total. We started with gold. Wasn't really a lot that happened. As you can see, we held it for a lot. Went in with 0.15, then we went in again 20, 25, 30. Yeah, we went in the 0.30 in gold. Went in the 0.30 with gold with $60 account. So you have to understand how confident we were in the trade that we took here. You have to understand. So obviously what happened here, how did we identify this great setup that we took? Of course, well, it was not really that simple, really. As obviously on the M15, we identified this pick formation low, first leg, second leg. Obviously market had moved, and market created this gap. This was around on a Monday, where market created this gap. So obviously we woke up in the day and seeing this gap, well, we saw an opportunity. We saw an opportunity in the market to attack and pounce on the market. And as you can see what happened here, we obviously were expecting market to close the gap. There is a trade review that we did on this trade, by the way. There is a trade review that we did on this trade, and we waited for market to close the gap. I was not really that happy with the way it closed gap. I wasn't expecting market to come into the gap and run away. No, I was expecting it to come, cover it, and then maybe come into these areas down here. But as you can see what happened, market didn't even hesitate to do that. Market went in, closed the gap, of course, closing the imbalance. Did not go into any of those demand zones down there, the order blocks, but obviously that had to do with higher time frame conference. As you can see, let me just show you how exactly we attacked this trade. As you can see right there, right there on the higher time frame, as you can see right there on our gap, the only thing market could do was close the gap. That's the only thing market could do. Market did not have any reasons to come back to these areas down here. There was no down candle order block. There was no point of interest apart from market closing the gap or market using the gap as a support for market to run away from that area. So that's what I identified instantly, and obviously that helped us, or that was our anchor point of interest that helped us to then start looking for trades. We still had not taken the trade, so what we waited for was very simple. We waited for a break of structure. As you can see, market broke that structure, and then what happened here, as you can see, we identified this based rally into this huge down candle. I like the way this down candle looked because it showed extreme velocity before moving away there, velocity and momentum before moving away. And as you can see, market came back to it nicely. The moment I saw market coming back to that area, I knew, okay, now it's time to pounce. The timing was just right. Market had just came out of the London session. Market had came out of manipulation, so I knew instantly, okay, I've got market here outside the manipulation session into my order block. My point of interest is clean. Down candle order block. I'm in a sort of breakup block as well. You can see right there, breakup block identified as well to give us further confidence on this trade. And at the same time, we identified, of course, that breakup block then became also our mitigation block, as you can see right there, where market came into that mitigation block. Of course, that was a previous change of previous break of structure that then we use to identify our points of interest within it. And as you can see, what market did, market came there, and market was, I mean, it stalled for a minute, but we entered the trade right there. As you see, we started in slowly, but at the end of the day, we ended up getting the trade. As you can see right there, I think this is a great example, but we took this right after market had run away. So as you can see what happened here, of course, we waited for market to give us a better confidence away. We waited for market to give us a bit of something, you know. And you see what market did here. Market closed below all these candles. This is something that I like. That's a close below the 13, close below the 13, close below for the 13, 5, 10, 15, 20, 25, 15, 30, 45, 60 minutes. So obviously after the hour, and then we decided to take the trade. And you can see market was gone. We went in there 0.15 and market was gone. And as you can see what market did here, we ended up adding onto the trade, but at that time we added onto the trade around here when we saw market is running away. And as you can see, market did its thing. Market did its thing splendidly. Went from that area to that area. As you can see, market, we entered there. We entered it also on the trading view, account, and we exited there. What about the same time that we exited on our personal account? And you can see market went from there to there, which was very, very good, very, very good, very nice trade. Market continuing the cycle, of course. There was opportunities for us to continue the trend, as you can see right there, down candle order block, rally based rally, accumulation, manipulation, distribution, taking out those highs, taking out those liquidity highs right there, of course, at the same time giving us an indication of a change of character, of course, in the sense of that being our break of structure. And you can see what market did here. Market used that point of interest, that demand zone, played around on it a bit, taking out people, inducing traders both sides, people who were seeing this as a head and shoulders or WM formation. Obviously we know where the direction of the market is going in terms of this three pin pattern right here. But obviously for us to have taken this trade, if we were to take it, we're going to take it right here on the second leg. I mean, we're going to be stuck there for around 2-3 hours, but eventually the market is going to go into our direction. So very nice trade there. As you can see, we netted about obviously now we're gonna calculate how much money we made, of course, on this, so we can identify. And in this instance we netted about let me see, we netted about 7. These are small numbers, but then as you can see right there, 80, so that was about 160, about 70, 80, 90, 100, 200, 210, 220, $240 plus, $240 plus. So obviously that was a huge jump from our account, of course, giving us about 300 plus percent account growth. So that was very good on our first trade. There was a lot of opportunities, especially this week, on our first trade. And obviously at the same time that we were holding this trade, we took another trade on Bitcoin. BCT USD. So of course, this being our second entry that we took on this road to, of course, at first I was aiming to make $1,000 within a week, so that's why I kind of coded the road to $1,000. But yes, I liked what I see. I liked what I saw a lot when I was trading on that week. Let me see if I can find my markings so we can identify. Okay, here we go. So obviously in this case we took the trade right there. No, not right there, right there. I remember this trade very, very well, because it was a trade that I was looking at, because I was patiently waiting for market to come into my supply zone right there on top. So obviously in this instance we're waiting for market to let me just fix that there. waiting for market to come back to the supply zone right here for almost a week, 2 weeks. And you see, the moment market tapped into that supply zone, I knew instantly, okay, it's time to pounce. Obviously, I had to wait for Bitcoin to form out and actually give me something concrete and stable for me to go into. So, and that's what market did. The moment market tapped into that supply zone I was looking at, market came into there, or market went into the supply zone, gave me a peak formation high, bit of a retest, a reset pattern, and I knew instantly, okay, it's time to trade. It's time to trade, and it's time to make money. Let's just wait for it to load right there. No, this is not the one. Just see. Don't forget to like, comment, subscribe if you have gotten this far in the video. Don't forget to like, comment, and subscribe. As you can see, where is it? Why can't I find it? I think, okay, is that the one? Yes. Okay, there it is. Okay, finally. So obviously, what we identified here, market pinned or touched into the supply zone we're looking at, and instantly I knew, okay, it's time for us to actually plan out our trade here. Obviously, I waited. Okay, I wouldn't say I waited for the market to give me my first leg, second leg. What happened is we entered the market with first leg, second leg information already confirmed. We entered the market somewhere here. We were right here. Another trade that we covered on our trade review. Our trade review is usually on Wednesday. If you want to see how we executed this trade more accurately, go to the video and check it out. But as you can see, what happened there is that, of course, market entered into this we entered the market, and instantly I saw, okay, market has given me this very nice fair value gap, and obviously this trade is a bit controversial, as this was a trade that actually took us out. One of the few trades this year that actually took us out, that actually didn't go in our direction. Because what happened here, but obviously we had that persistence, we had that drive, we had that knowledge and understanding that whatever happens here, we know where the direction is going, because we trust our analysis that much. Always trust your analysis. Your first instinctive analysis, your first instinctive bias is usually the right one. So obviously what happened here, we identified first of all, identified break of structure, so that being a lower low. Obviously we identified that being a mitigation block as well, because market came into that area. There was really nothing here on top for market to come back to, so we took the trade right there. As you can see, let me find that Bitcoin trade. There we go. Oh, but this was after we took the trade, so can't really show you, but as you can see, we'll get to that one because we ended up trading it again. I don't think I have it here, but it's fine. So we took the trade right there. We made a bit of money. We were excited, and at the same time we were holding the gold trade too. We made a bit of money. We were excited, and then what market did, market then came back, took out our trade right there. Took out our trade there. We held on it for a bit, but eventually market took out our stop loss, and we were out of the trade. Now, obviously, it wasn't something that I wasn't happy. I wasn't happy about losing that trade because, number one, our timing was a bit off. Number two, it was a bit of a cheap sell to get because it was in our discount zone. I wasn't happy, but at the same time, I saw everything that I needed to see, but the trade just didn't work out. So obviously, I didn't lose hope because I knew where the directional bias was going. I mean, I wasn't gonna let the market play with my mind. No. I trust my strategy. I trust my analysis. I trust myself. And obviously, what happened here is we didn't do anything for a time. We waited for it to come into New York first, and that's what market did. We waited for market to come back up, of course, taking out that taking out that high right there, of course, making that liquidity for people who sold there a bit earlier than we did. Obviously, we were part of this liquidity as well right here. We part of them as well that traded that fair value gap, who were taken out. Obviously, that being our sell side liquidity there, sell side liquidity there. So instantly we knew, okay, market has made a very nice liquidity sweep that we were part of. Unfortunately, something that I hate, making my stomach very, very sick, but no matter. When you're instantly, okay, market has sweep liquidity, market has given us this gorgeous anchor formation, pick formation, high right here, reset pattern, and we identified market saying, okay, there's a fair value gap right there, an area of interest that's very, very nice. And instantly we're like, okay, we're gonna wait for market to pin in there, and we're gonna see how we can do it. And as you can see, market went in there splendidly, especially on our M15. I liked it more on our M15 because, excuse me for that, we took it off our M15. That's where I liked it the most. I'm like, okay, now we are talking, now we're getting into business. I liked it very much, especially on my M15. And we took the trade. We took the trade instantly. Because obviously on our M15, what happened here? On the M15, there was this gorgeous order block right here, rally based rally with the sell side liquidity just hovering below it as well. Obviously, that liquidity as well that took us out. I was like, there's no way. These are one of those trades that you actually put your whole house onto, because at the same time, there's a breaker block right there on top supporting the trade, and I knew instantly, okay, it's time for me to actually put my house on this trade. Put my house on this trade, actually trust my analysis and my directional bias that I've indicated. And as you can see, we took the trade right there and we made money. Market went away splendidly, we broke even, secured the bag, and market was gone. We exited right there. And yeah, clean trade. Very, very clean trade, as you can see right there. Indicating to you, as you can see right there, that supply zone, that was the fair value gap that we actually marked out at first, that didn't get respected. And you see market even used it as support to continue the trend. But as soon as market showed us this first leg, second leg pinning onto that coming into that order block we're talking about, obviously we were looking at it from the M5. As soon as market showed us that, we knew, okay, it's time to kill. Waited 5, 10, 15, 20 minutes before taking the trade. Obviously we're waiting for the close below 13 EMA, and market went, as you can see right there. We even closed, we broke even. Market went, and market did the most. So obviously right there, and at the same time we secured the bag. You can see right there, we only entered once, unfortunately, in this one. We entered once, but as you can see, it was very, it paid off. You can see we exited around 3 o'clock. So you can see we held that trade from 1 to 3. So we went out there exactly, very accurate. We went out there, a very good trade, something that I'm happy about. And obviously that puts our total from 240. Now we were up about 240, almost $400. We're almost up $400 just off 2 trades of about 3 hours. We're up about $400. So great trade right there that we took off with the M5 as well. Now obviously there was a lot of risk that came with taking this trade, but it's about trusting your strategy, it's about experience, it's about trusting your analysis, it's about making executing those tough trades in tough moments with small monies as well. But by that time, obviously after this trade was confirmed, we took our money, we had enough foundation and bedrock to then continue the trend. So great trade here that we took here, puts our total to about almost $500 for 450 there. Very nice stuff. So and obviously I think that's where we ended the day. We went into the next day trading USD JPY. Now obviously the JPY one was also a nice trade. I liked it. Next day came back, obviously. I'm not to say I took a break from Forex, from indices. Nah, I just saw something that I liked very much of USD JPY, and it was a sell move as well. And especially it being the fact that we actually are looking at this for like a long time ago. We're looking at JPY for a long time ago, and great trade that it gave us here. So let's look at it. Where did we take the trade? Okay, we took it right there. Splendid stuff. So obviously what happened here, as you see the trade that we took with the arrows, guys, the arrows. But as you can see there, we're right there. Obviously from the high time frame view, obviously USD JP was in a down phase. First leg, second leg gave us our high time frame peak formation high, our anchor formation. So obviously from that era we knew we were waiting for the 3 levels. We had level 1 consolidation, level 2 that was violated. So instantly when we knew that level 2 was violated, obviously then that still not being our level 2, this being our level 2, and obviously market came back, violated it, and now we knew, okay, the cycle is not complete. That is definitely a swing point. And yes, so obviously we identified the swing point right there, and obviously we knew what we had to do. Obviously, number one, what I liked about that swing point, it left a very huge down candle order block. That was very nice right there, our up candle order block. Obviously how I then we took this trade is we went down to our H2 and we identified this rally based rally. We identified this order block right here, which was gorgeous, by the way. Very gorgeous, very gorgeous order block right there. And we decided, okay, great stuff. So obviously when the market came to the order block, of course taking also a lot of significant areas in terms of sell side liquidity right there. Sell side liquidity was taken out. There was also some liquidity that was taken out there in that makeshift fair value gap. Of course, that was our imbalance being filled out because of the up candle order block that right there on top of it, making that fair value gap super invalid. So obviously we knew there were people in there who were trading as well. So there was money that was taken. So this market has to continue the cycle. And okay, let me move to my H1. So from that era, we then identified, okay, market is very nice. I like how it's looking. And obviously on the H1 it was even better. Market giving us that quarter wood slash head and shoulders formation, and I knew instantly, okay, that's a great trade. So obviously from that era we knew, okay, it's time for us to pound, it's time for us to go in there, and it's time for us to make this money. And as you can see what happened here, okay, there's another trade that we took, not the trade that we talking about now. Let me see. Okay, still not the trade. Let me see. Okay, I don't think I have the trade right here. I don't have the example of the trade right there. But as you can see, we had our sell. Obviously we took our first sell. We took the trade right about there, right there on that quarter wood, right there on the arrow. We took the trade right there on the arrow, and obviously we went in there. Excuse me for that. We went in there, took the trade. We went in about 3 entries, 3 M5, M5, M5. What I mean, 305s, 305s, and we made our money very nicely. As you can see there, the slides continue. So we went in there 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 65, 70, 75. So that was a big trade that we took there. Went in there 0.75. Massive big trade that we took there. 80. So went in there 0.080, close to 1 lot. Just showing the amount of confidence that we actually had on this trade. So obviously we went in there, if I remember correctly, we went in there with like 0.15, and then obviously when market then confirmed to us that okay, this is actually a good trade, market obviously continue dropping, we came to this area right here, and then that's when we added on to the trade, especially with market coming back to this covering this makeshift fair value gap that we had right there. When the moment market came back to this area, of course this area also was then aided by there was a bit of M15, there was M15 supply conference that obviously gave us confirmation for that trade. As you can see right there, I mean, every trade that we took, there has to be something that's backing the trade. Unfortunately, it's just how it is. Every trade that we take, there unfortunately has to be something that's backing up the trade. And as you can see in this instance, there was, I mean, I didn't like how it looked, especially with that down kind of order block that was up there. But obviously the reason why I took this trade is because despite of this down candle order block right here, despite of that down candle order block, what gave me the confidence that I should take my trade at that moment is what I was seeing on the high time frames. And obviously what I was seeing on the high time frames was that there was no down candle order block on the high time frame. See, high time frame confluence is key. No matter what you see in your lower time frame, high time frame confluence is key. So there was nothing on the left here on the H1. So that's something that I knew. Okay, definitely we're taking that trade right there, and we added onto the trade. Added a lot onto that trade. So obviously if we went in the 0.80 and we started with 0.15, we added about 0.65 on that trade. 0.65 went in there and we came out somewhere there, but we held it for 2 days. So we were out right there, and market did its thing. Market paid us splendidly. You can see from that area right there, to this area, we traded the whole level. So obviously then that was the trade, selling USD JPY. That then brought our total to quite a substantial fee, because we were about 400 plus right there. And obviously by the edifications of this trade, 39, I'm not gonna count the $2 trade, but 39, 80, 90, 110, not 110, 120, 30, 40, 50, 60, 70, about $200 there that was made there. So obviously that brings our total to $600 plus on our second day of trading. By the way, second day of trading, $600 plus. And we were not done there. We were actually not done there. That's what I like about this trade. We were not done there. That was a great trade as well. Great trade, something that I liked a lot. And then after that, let me see what we did there. After that, obviously, well, we traded Euro USD, GBP USD, but it was nothing crazy. The big one that we traded after was USD CHF. This one, I liked it a lot. I liked how it looked. I liked what it was showing to me when I saw it on the opportunity, and I took that trade. Very, very nicely, and I wasn't disappointed. Took that trade very, very nicely. Wasn't disappointed because it actually paid me. And you see, I bought it. I actually bought it, of course, of this trade. I bought it, and yeah, where did we buy it? Okay, we bought it right there. Okay, I'm forgetting maybe about my things, but now I remember very, very well what we did here. So obviously this one was a bit of a tight one, but it was tight, but we actually made our money. I mean, it looks messy. It looks very, very messy, but we actually made our money. Let me see, was it I don't think so, yeah, because we ended with USD CHF. Okay, yeah. So okay, before we go into but we'll look at that Euro USD trade that we took in a minute. So obviously Euro USD, USD CHF, United States dollar versus the Swiss. What happened here is let me see clearly. Okay, the other trade that we took to add on to it, I want us to see it from when we actually identified it and we actually took the trade. Okay, not there as well. Then it's okay. I don't think it's too. Okay, it's fine. We'll look at it from a higher time, from a higher point of view. Let me remove these. Yeah, I think there's some that are stuck there. No. Okay, it's fine. We'll look at it from here. So obviously what happened here, this was after as well we identified the peak formation low, first leg, second leg. As you see there, first leg, second leg, especially with those break-off structures on the side, with the amount of momentum that market left on that area, and you insist, okay, there's something there. And this market gave us this accumulation, manipulation into this area. I would have liked market to come into this down candle order block, but either way, what it did was still good. Obviously, a lot of people were in there buying, they got taken out, but I liked what it did there, specifically because of the higher time frames. The higher time frame confluence is important. So obviously, from that screenshot, the reason why I said I like what it did is because of this down candle order block that we saw here, of course, from this side here, from this liquidity sweep before the reversal. Market gave us this down candle order block here. Very, very nice stuff. Obviously market then ran away with extreme velocity from that area, breaking significant structures of the left, at the same time confirming our change of character, confirming our break of structure. You can see right there what happened. Market then came back, retested back, and okay, from there I knew instantly, okay, it's time for us to actually do something. So we're waiting for market to come back into the down candle order from the H4 down candle order block. As you can see from the side there, market didn't respect this as a fair value gap because of that down candle order block. That's how powerful down candle order blocks are. That's how powerful down candle order blocks are. Market covered that down candle order block as a imbalance, of course, came into that area, gave us our first leg, second leg, and then market moved away splendidly. Went out, broke that structure, breaking away broke that structure, at the same time breaking that as an external liquidity high. Market moving away from that point of interest. The market came back into it, confirming our first leg, second leg, and then market went away. Obviously by then we were in right there, as you can see from that screenshot. We were in there, 5 10 15 plus 0 20, and we're making decent money. Before market retested back and continued the cycle, we're making decent money. This was a bit of a smash and grab, smash and grab trade, because we entered, they weren't really making a lot of money. This is why we entered with extreme velocity to then make up for the money that we were kind of losing, because it was a bit of a slow trade. But in terms of what happened, we went in 5 10 15 20 25 30 35 40 45 50 55 60 65 in total 65. Let me see the other part. 65 70 75 80 85 90 95. One lot 5, 1 lot 10, 1 lot 15, 1 lot 20, 1 lot and 20, 1.2 lots. 1.2 lots is a lot, I'm not gonna lie. 1.2 lots is a lot. And obviously it was 1.2 lots because it wasn't showing me. I didn't like what it was showing me. Because it was a bit moving slow. But the moment market came back and gave us that first leg, second leg, moving away from that area, breaking these structures, that's when we actually made most of our money. And yeah, it was a smash and grab thing. We're in and out there. We're in and out after the first day, second day, and we're out. Made our money. And see if you do the calculations there. 12. That's if you do the math there, I'm going to have 5 10 15 20 25 35 45 50 60. So $100+ and obviously from there another about 15 25, about let's see 5 10 15 20 25 30 35 40 45 50 60 65, another $100+, adding on to our $600 plus, and we made $800+, $800+. And obviously we ended up taking this Euro USD one as well, that trade as well. Very nice stuff. Simple sell, nothing crazy. I'm just gonna show you with the example right here. But it was a simple sell, nothing crazy. Something that we're stalking for a while. Nothing crazy. Market coming back on our Monday. It happened about right before the week was about to finish. Came there, gave us that first leg. Not even the first leg, second leg. We traded it straight away from that area. Went in there, broke even instantly, and market moved away very nicely. 0.50 as well, making $22. I mean, it wasn't what we were intending to make off that trade, but we took it because we made a huge substantial amount of money in a short period of time. And yeah, guys, that's how we made $800 plus within a week from $60. Very good trade. And by the way, stop losses were limited because we're just trusting our analysis. It's very key. Trust your analysis, trust your knowledge that you've gained, trust the experience that you've had in the market. And obviously, if you haven't had that experience, then you can use these videos to then help you with that experience. So yeah, guys, thank you for watching. Don't forget to like, comment, and subscribe, and click the notification bell icon to be notified in case we drop another video. Yeah, goodbye.
Actions, I bought it fine, so tell me why. And baby, I thought you were mine and mine alone. Yeah, and the things you say, the things you still say, tell me why, just make it make sense. I end up missing you and texting you what's good, and it's turning my head upside down. It's turning my head upside down. I don't even know what to say, cause it's pure attraction, it's pure attraction. Cause baby, you used to lie to me.